Good morning. This is Larry McMillan with a stock market update on Monday, June 10th. So last Friday, we saw S&P trade up to a new all-time high intraday, although it backed off from that and didn't close at a new all-time high, but it did that a couple of days before that. So from the S&P chart, everything is fine. Market internals are not quite agreeing with that. But with the S&P chart being bullish, we are still holding then a core bullish position. There should be support in the area just above the old highs, 52.60 up to about 53.25. If we fell back below 52.60, that would probably be a negative sign, although there is support below that at 51.90, which is the May lows. The equity-only put-call ratios remain on buy signals. However, they're in deeply overbought territory, and so the computer analysis programs that we use to analyze these charts are saying that the weighted put-call ratio is ready to roll over to a sell signal. That's based partially on reversion to the mean sort of analysis, plus the fact that some pretty small numbers are coming off the 21-day moving average. But if small numbers came back onto the 21-day moving average, those sell signals would not materialize. So we're just going to have to wait and see how this develops over the next few days. Brent was pretty bad on Friday and actually earlier in the week. So we're testing, I would say, the Brent oscillator buy signals that are out there right now. They're still clinging to life at this moment, but if we get another day of negative Brent, especially with S&P doing well, but the market doing poorly, or Brent doing poorly, that would give us a sell signal probably from those Brent oscillators. But right now, that hasn't happened yet. New highs versus new lows. On Friday, we saw new lows on the New York Stock Exchange edge higher to a greater number than new highs. If that happens again today, that would stop out that buy signal there that we've had in place for quite some time. VIX continues to trade at a very low level, so the trend of VIX buy signal is still in place. There would only be a problem there if VIX were to rise up above its 200-day moving average, which is currently at about 14.65. Been seeing quite a few negative write-ups over the weekend, especially as goes with Brent versus the stock market. There's already calls for a Brent divergence sell signal. Not really sure you can say that yet. Yes, over the last couple of weeks, Brent has been declining while S&P has been inclining, going to new highs. But 2 weeks doesn't usually qualify as a full-fledged negative divergence. So we'll just have to keep an eye on that. If Brent were to suddenly expand again, it would quickly erase that supposed negative divergence. Finally, the construct of volatility derivatives is positive for the stock market as well. So to summarize, we're still holding our core bullish position, and we really don't have many sell signals in place. In fact, the only one's a McMillan volatility band sell signal. Other than that, we are seeing some weakening, potential sell signals in Brent and equity-only put-call ratios, potential stop out of the new highs versus new lows indicator. But those things haven't occurred. If they do, we will trade them. But as it is right now, we're still holding our bullish position. I invite you to visit our website, check out our newsletters. We just put out a new commentary on Friday about some perhaps unrealized risk, unrecognized risk in trading options that are going to expire the same day. Meanwhile, have a great week trading.